Welcome back to Trader Sage. We're going to review price action on the S&P 500 futures chart. I was playing around with, you can do the NQ too. It doesn't really matter. You can do anything really. You guys want to, this is like the lab for me, man. This is not like, I'm not even trying to like prove anything to anyone or to myself. This is more like reviewing, more like a lab for me, where I'm looking for opportunities to identify my edge in the market. And so we have a run on stops. Technically it's a 4-hour chart, treating the 4-hour chart as our higher time frame chart. Like ICT says, if you treat the 4-hour or the 60 minutes as your daily chart and study 5-minute market structure, a whole new world opens to you. Test it and see. All right, boom, right? So 4-hour, we got run on stops here. Then we have this like reversal, right? So we got technically run on stops. That's external range liquidity. External, so external to external. You can do that too. So I know very often, including myself, I do internal range, external range, and vice versa. But you can, like ICT said, you can do swing low to swing high, or swing high to swing low type stuff. Well, you can do fair value gap to fair value gap. That's fine too, right? I mean, you're gonna see that like all the time, right? Fair value gap to fair value gap, like higher time frame. So this is a prime example: external range to external range, or swing high to swing low to swing high to swing low. All right, so all right, what else do we have here? So when price is here in this range, like all of this right here, like all of that, obviously we inside of this price range, inside of this range. So you go here to here. That's the dominant price range. Dominant price range here. Take this back off. So we can discount the premium. So once price runs this swing low here, you want to look for opportunities to go long. So this could be your turtle soup entry on this time frame, right? Ran the low, and then it rallied higher, right? And there's no indicators. There's things here that you can use to go long, including the swing low, price breaking this this third candle here, and then rebalancing this fourth candle here, pull back. You can highlight this bearish fair value gap, or you can this bearish fair value gap that turned into what? An inverted fair value gap. So point this could be considered your low risk buy here. That's off this one time frame, right? Likewise, if you kind of like consider this a run on stops, you consider this a breaker, an order block, and you can utilize that to go long here on this candle, right? It's up to you, right? I'm gonna make that like a purple or something. All right, so we have that, and it's still in a discount if you're gonna go long. So you have a pullback. So that's your first entry. Yeah, this ran these relative equal highs, and you have this bearish fair value gap here that's above 50% and kind of still inside of this range. So you already know that it took out a higher time frame level, right? Ran stops on a higher time frame level. So this is August 1st. This is July 16th. So you already know this is a weekly, the very least is a weekly level. And at the very least is a daily level, but it's about 2 weeks prior. So now we know that's a weekly low. That's a higher time frame level. Stops are ran. We have this order block. We have this inverted fair value gap targeting these relative equal highs, or this bearish fair value gap pulling back inside of the range. You can see this swing low this swing low. So this is another type of PD array as well, right? This is the immediate rebalancing of a price range. So that's that. Get it got in down here too. I'm just saying, like, whatever one sticks out to you the most. You don't need all of the PD arrays, but whatever works for you. Low key, you could ignore this one. Let's take that inverted fair value gap. Boom. Target these highs or this fair value gap here. Drop back down into this range. This is swing low to this swing high. This is another range inside of this range, right? What's a Dylan range? Dylan range, you have to consider that as well. And so this would be that one here. That's eyeballing it. You can, all right, so we have optimal trade entry long. This utilizing this swing low to this swing high. Pull back here at 1800 hours, 6 p.m. on Tuesday. Long, taking out this relative equal highs again and violating this bearish fair value gap here. So we can argue that price is showing a willingness to go higher here, but just trading above it over here, right? So anyway, that's one standard deviation so far from this range. One standard deviation here. The price is consolidating above this high time frame key level here. So boom, right? Let's take that off. And so we have this price ran above it into this, you can say this liquidity void, right? Or you can say this bearish fair value gap. You can do that too, right? And then it pull back inside of the range. That's here or here, right? And this would be your order block, and this would be your propulsion block, so to speak. And then that's why price is reacting here. Yakety yak, don't come back. All right, so you use that, or you can use, like I mentioned here, whatever stands out to you. And that would be blue for me. And you can see either one of these in this situation works, right? All of this is noise right now. So this one's easy to see. So just keep that in mind, that the bottom of this void here is a bearish fair value gap. So when if price drops back down, you want to contend with this bullish fair value gap, because it is below. I think it's, let's just test that out, right? Can eyeball it and see, but right, so it is below 50%, right? The balance of it. Then again, it can trade back down here, and you treat everything like true support and resistance. So if it doesn't hold, it doesn't hold, right? You take the other side of the trade, because this is you can argue, obviously all-time highs, right? And you can argue that, hey, this is actually a market maker sell model here, sell models here, and then the buy model here, taking out these this consolidation, the original consolidation here. And now you want to see, hey, is price consolidating here? You can do internal range, which is this bullish fair value gap, or this one here, fair value gap. And then you can say, hey, all right. You may say here, how come it didn't go below 50%? And this is where narrative comes into play, right? Because you may think, oh, it's chugging along and this is 50%. It should now go back down here, sweep these lows before it goes back up. That's a possibility too. But so questions, if you had questions, right, this is where you find your answers, right? Because the higher time frame draw on liquidity is not there. Obviously, we're in no man's land, so you want to, like, you know, play everything by ear, so to speak. But in this situation, I'm going to use this fair value gap here, and the objective of that is because you can say, you can easily argue that internal range liquidity, and you can see the bodies essentially respecting the 50%, or at least the high of that fair value gap. So internal range to what? External range liquidity. So external, this would be internal, and this is like consolidation, so it's kind of tricky. So again, the bodies tell the story and the wicks do the damage. So it ran these relative equal lows as well. Ran this low, ran these relative equal lows. So where should it be going, right? It can indeed take out, ideally take out buy side liquidity, right? And ideally you want to see it hold this level actually, because this is just like a false breakout above this level. So you really want to see price hold above this level. And if you don't want to say the level, then you can just go hold above anything else. So like whatever you recognize. I'm not gonna get too crazy, right? So and that would be today, right? All of this noise today, you look at it and go, this is not necessarily tradable, but it is. And I really don't even know where I'm going with this, but whatever, bro. Like whatever. All right, so boom, right? Do the triple screen. You can go from the 4 hour to the 1 hour. Look for opportunities there. But let's test out these levels we drew from the 4 hour. We're going to go to the 15-minute. Right. These lines delineate 4 hour candles, I believe. That would be highlight last bar. The indicators is highlight the last bar. And in this case, I put it for 4 hours. So you have to keep in mind also that trading, I have to say trading weight, right? Trading view is very much different than how they represent 4 hour candles is different than how Thinkorswim represents 4 hour candles, right? It's a little off. It's an hour off. All right, so you can kind of, I want to keep it there, but let's just take it off. And let's turn this on. We don't really, I'm experimenting with this here after watching JCap's video, but significance of the Asia range, that's here. I did review, for me, it's really important for me to go, at least to myself, to consider, what is this? Okay. To consider that everything on the chart should serve a purpose. Everything here on the chart should serve a purpose. And if it doesn't, then you need to get rid of it, right? Or fine tune the machine. So question for me was, how can I best use the Asia range? Because why am I drawing these lines for if they not, you know what I mean? Like, what's the point, right? And then I discovered, not like I discovered it on my own, but you know, part of that journey, the journey that we going on, you kind of determine. So here, this dotted line is the 50% of the Asia range that, as I calculated. Right, so that's, in many cases, it is a significant range. And you can see here the previous day, Wednesday, this the Asia high, this the Asia midpoint of the Asia range here. And you can see like price was doing things at this level here, right? Like the bodies are telling the story and the wicks are doing the damage. Not big damage, but it's doing something, right? You know what I mean? So, all right, so we are here with the news. Look out this Asia high. So look, peep game, right? So the London session took out the Asia low. And you have here like this swing high, whatever, breaking that, pull back into this bullish fair value gap here, and then targeting these relative equal highs. You have a bearish fair value gap here. You just look across, and this is climbing up right before the 8:30 hour. The 8:30 news. That would be PPI, core PPI, and then market kind of drop down. What do we kind of drop back down into this level, or this fair value gap here, or this one, however you want to call it. Let's draw that out just to see what that looks like. All right. These colors are too bold, man. Too bold. Let's tone it down a little. All right, so that's that level. This is the other fair value gap here. And then let's stick to the form. The 4 hour to me does go with the 15-minute, but I'm gonna follow Sensei's guidance in this regard, because he says a lot. And whatever's for you is for you, and whatever's not for you, then let it pass you by, because there's nothing you can do with it, right? Don't overcomplicate it. One thing that I am working on is keeping things simple and light. Simple and light. That's like something like to hold on to, because what exactly is keeping things simple, one, and then turn around and being light about it, like, right? Keep things easy. You follow your trading plan, and if the trade doesn't work, it's what it is, right? That's just part of your trading plan, because you had a reason to exit the trade. The same way you have a reason to hold the trade, you have a reason to exit the trade. And if you honor your rules, then why are you worried, right? If you honor your rules, one, if you honor your protective stop, two, all of that's part of the game, right? You targeting one-to-one trades, and you're just being consistent with that, not moving your stop, not chasing price, and that's your plan, right? Your plan is only, hey, I need a way to calculate or determine when there's volatility or increased volume in the asset, and that's my rule. I'm only taking momentum trades, right? That's your rule, right? Don't go fishing for anything else. Like, what are your rules for momentum trades? What are your rules for mean reversions or pullbacks? What's your rules for continuations? And like, what's your rules for false breakouts, right? How do you identify key levels? Like, low key, if you identify key levels the same way every time, it is what it is, right? Look, I took this, I was part of so many groups, like, learning this stuff here. And one of the teachers, you know, I ain't gonna, anyway, one of the teachers used to, so sometimes you go, oh, 1, 2, 3, that's key support and resistance, right? Say, oh, price broke 1, 2, 3, 4, 5, 6, 7, right? This is a key level. This is a key level, right? So normally we do 3 touches, right? Normally we're taught 3 touches, and that's a key level. But if you do 5, that should mean, like, on a relatively high time frame, you do 5 and you go, okay, that's really a key level, right? And on top of that, you go here, 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 here. And you could adjust it too, because it's not, you could adjust it like this, or you can pull it back down here, whatever one you kind of see as relevant. But I do like this on the body here, because this looks like more, and this is what it's touch, 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 touch. That's what it's mean. Like, this is testing that level, this is testing it, this is testing it. So that's 3 touches. So the moment it breaks above it, you say, oh, what's going on? Kind of second guess yourself. So you have that key level, you have a fair value gap here as well. Then you got like this breaking structure, especially with this small fair value gap here. Pull back, ran stops again. And that's an optimal trade entry long. And I'm like, right? So boom, right? This is your entry. You got your 1 standard deviation exit. And that's your 10 o'clock. So yeah, around a key level. And ICT also mentioned, like, so what makes a key level, very often it's like a swing high or a swing low that's accompanied by a fair value gap. Then you know, like, oh, this level may be real. But this is really how you identify optimal trade entries as well. It's the low, right? The low, the swing low, and then when price breaks a key level, and you kind of have your directional bias to be long. So like right here, price is here. It didn't pull back to optimal trade entry, but it did pull below 50%. If that's one of your rules, hey, I only take trades that's 50%, at least 50%. That's fine. You can do that. Or you can say, oh, I'm only taking OTE setups on the pullbacks. Then you have to wait for this one. And obviously you would have to adjust that high from this high to this high. And now you have optimal trade entry long, and that's bullish fair value gap. And you can argue this is a breaker, low, high, lower low, a lower low here. So that even makes it more so a key level. But you don't do that, then who cares? Don't worry about it. Stick to what you know. Keep things simple. Keep things light. Don't stress yourself out. Right? You put too much size on, then you panic. Right? Like I'm actually reading I read 2 books already. It's small. It's like 45 pages. I do recommend both of the titles. It's called. It's both of them are by Price Pritchett, and the books are like 45 pages, and it doesn't even crowd the page, right? So you got U Squared, and you have Quantum Leap Strategy. And I'm also reading. I read those, and I'm like reviewing them technically, like in the background. And I'm currently reading With Winning in Mind by Lonnie Basham. And I highly recommend all 3 of those books, and taking them slow, not just running through them, but actually like contemplating and implementing them. That's, for me, it's low key like a game changer, right? It's like, come on, bro, you got this, right? So let's stop there to do support. Let's try another one. Then we're going to drop down and see what exactly does it look like. What does it look like on the lower time frames? Is what I'm telling you even useful? And you have 1 touch, 2 touch. Let's see, 63.74. All right, fell the high here, fell shy of it, but 3 ticks. Doesn't matter, right? So 1, 2, 3, 4, 5, 6, 7, 8. So you have a lot. Of touches. Means nothing right now. And this one, wild touches, right? And you could adjust it, right? It doesn't have to be. So sometimes you think support and resistance is like a level. It's actually more like a zone. And I'm not talking about supply and demand zones or whatever, but the price, the levels is like a zone, because you can see price is like disrespecting it in many instances, and then it's holding in other ones, right? So let's see. So we're gonna just do one more, then we get out of here. So there's your swing high here. So we got 1 touch. Let's pull it down so we can. All right, so we got 1, 2, 3, 4 touches. And there's your 5th one here, or you can use any of them. But let's make sure we are getting what we need from these charts. All right, let's go back down to a 5-minute. And we can use that same idea. That's actually, you can use that for market making buy and sell models too, right? If you could identify levels, then you should be able to. This is all really supply and demand and support and resistance, right? Like, all right, so, and technically another thing you can do is the 4-hour levels. Then you can go to like the 1 hour and do the same thing, right? Because now you can see like little other nuances. So like there's a level here, right? But whatever, let's see what we can see, what we got, right? You're in the trenches. Working out, I always looked at this one teacher. I'm gonna call him a teacher, Pavel Tasatsulin. Spent a lot of time like studying his material. He has this book also. It's called The Naked Warrior, which is pretty much just he teaches you pistols, how to do one-legged squats, one arm push-ups properly, so to speak. And yeah, this Naked Warrior is kind of like, oh, you don't need equipment. All you need is like willpower, like, and commitment, right? Just keep at it, right? Don't add more to it. You don't need a whole bench or whatever. This, all right. So anyway, not necessarily, but anyway, don't. I'm just say this is just entertainment. Don't quote me. All right, so here's that. And obviously, we didn't go all the way down, so we're gonna play around with what we have here. All right, so we have here price broke above it, but you still here, right? You still. Let's take that off. But that's relevant too, though. So you can see the level price couldn't hold 1, 2, 3. Didn't really do a drive above. You can do 1, 2, 3 here if you wanted to. Short retracement. Still took out the high, Asia low. Played around at the equilibrium of it. Came back up, took out the high again. Came back, took out the low, retraced. I can see a little breaker here. High, low, higher, high. Dropped. Taking out these lows. Traded below this key level. And then kind of up and down action around it. Continue lower, took out these lows, but say what's the range? You can do here to here for the short opportunity, but it's going to fall short. Right? Still below or above 50%, but why didn't you use this one? Why not, right? Why wouldn't you? What are you doing? All right, so you have optimal trade entry short here, targeting this low of the range. And you have all of this is technically considered a balanced price range because you have price, the market offered. There's different types of balanced price ranges too. And I've seen ICT do something real fly with the breakaway gaps and with a fib extension, and that helps determine where price may go. I like that, but I don't have any mastery on that, so I'm not going to entertain it right now. Doesn't mean I'm not, like, if I feel like it may be valuable, doesn't mean I'm not willing to try in the future. All right, so right here we have optimal trade entry short. You don't agree? Technically, optimal entry short here. If you're not like an OT trader, you didn't factor this in, then you may say, oh, this is turtle soup right here, and oh, I'm not taking any trades until price shows a willingness to go lower, and you can do that. You can do that too as you see fit. Do have a violation on this bullish fair value gap here, which is like a retest right here on this low, on this candle, this bear bar, and failed to take out this, created relative equal lows. All three of those relative equal lows, retest, drop. All right, what are we talking about? I feel like I'm together, but I'm like all over the place almost. But anyway, you have this run on these lows. You have this nice ugly gap here and the pullback. You may miss this entry. You can catch this one. This one's clear. But I had a conversation with one of my trading buddies, BMO. Shout out to bro. And he uses the MACD he uses multiple MACDs on one time frame. Multiple MACDs calibrated differently to represent different time frames. And that's his thing. It's his thing. Kudos, right? Because you throw a moving average on here too. If you're consistent, look at me. Look at bro. You throw a couple of moving averages on here and you say, hey, I'm only trading when the EMAs cross over. Good for you, right? And it takes out a low, whatever. All closes above. Let me get out. Like, okay, all of this is valid. If you stick to this one rule, this is it. Like, Proper risk management. Oh, I'm only taking this short. The moment it goes flat, I'm out. Or the moment it approaches the key level, I'm out. Whatever. Like, look at that. Just following this. See this? You know, you could win. That's it. Goes flat. You consider, oh, let me put the stop below the most recent swing low, whatever. You get until price reaches that high time frame draw on liquidity. And I saw this. I'm like, oh, I drew that 4-hour support and resistance level or key level where price didn't even go down. And as usual, ICT has a rebuttal or response to that, which is literally that this is a draw on liquidity. Doesn't mean that price has to go to it. And you can argue here, you have the 1, 2, 3 drives Indian pattern or 3 drives pattern. And that's mentioned in Linda Rasky. And I don't know why no one mentions the male author of that book, Street Smarts, but sorry, bro. Sorry to you, man. But yeah, Linda Rasky brings that 3 drives Indian pattern or 3 drives pattern here, 1, 2, 3. That takes out liquidity. Here you have a break and structure pull back into a balanced price range or a fair value gap. And then boom, hits the level, breaks through it, pulls back to it, takes out the high, you know. Anyway, I'm like tired of talking, bro. I don't know if I was helpful or not, but yeah, I know what to do, man. You're not, please like, comment, subscribe, and actually, man, just reach out, man. Ask me some questions. Don't try to like, somebody email me like they trying to backdoor me or something. Like, you go ahead, man. I don't even know. Don't waste my time. I'm not like, don't waste my time. Yeah. All right, man. You guys stay great. Stick to the rules. Stick to the rules. I'm a person that really don't like people telling me what to do. I don't like, I'm really resistant to rules. And that's the hard part here in trading, is that you have to follow the rules. Actually, you have to trust yourself. Like, you really have to trust yourself. At some point, you have to trust yourself. At some point. You know what I mean? It's not the market that's offering you opportunities. It's your ability to spot the opportunities in the market and execute on them and, manage it appropriately. You got to be consistent. That got to be you, like the rules. Like, you got to have rules that govern you. Like, it's all about you, man. You doing this for whatever reason, but it's all about you, man. Don't be the candle that provides light for the people while burning itself out. So low key, man, it's like, oh, I need to be a millionaire by tomorrow. Somebody told me I want to be a millionaire by tonight. And I looked at it like, how much you willing to risk? Like, you want to play like a dangerous game like that. You got to be willing to risk a lot. Don't cry. Don't cry, man. I remember taking one trade, man. I was trying to turn six bands to like whatever, man. I was about to retire everybody I shake hands with type stuff, I'm joking partially, but you get it, right? And you know what I mean? 6 bands. I was trading options like, oh, it's gonna come back. It's like a couple of years ago. I was like, yo, I watched it like go from 6 to 3,000. I watched it go from 3 to 4 and then back to 250. Well, 2,500. I'm over here cutting off zeros. And I just watched it, and I'm like, it's a 0 DTE options trade too. And I watched it go down to like a couple of measly hundreds or something. And that's when I didn't even know you can exit an options trade, exit it before you can, before the expiration date or before it expires. I didn't even know. I thought you had to like, once you in it. Like, obviously I paid for that one. That hurt. That actually hurt me to make me go like, yo, man. I'm like, I can't do this. Or I need more, right? That's what happens too, right? Like, oh, problem is not me. The problem is the system. System didn't work. Lying to yourself. You deserve what you get for lying to yourself. Anyway, you don't deserve it though. Tighten up. Please like, comment, subscribe, man. You know, definitely comments. That's, I don't care about no likes and no subscriptions, man. But this is also like a lonely game, right? It's a lonely space. Like when you meet like-minded people, that's your tribe. You hold on to them. You know what I mean? So get in the mix. Let's chop it up. You know, build your bank account, build your you know, make everything count for you. You know what I mean? Not everything costs an arm and a leg, you know. Don't sacrifice your health for wealth. That is not what this is. This is not, that is not what this is, right? Like, tighten up. Anyway, I'm out.